All right, guys. So I want to talk about in a little bit more depth the AMC technical picture here. I want to go over the bank and hedge funds liquidations that we are starting to see. And I also want to remind you guys of some of the hedge funds that are taking on new AMC positions. We're going to look at the Fintel data, the 13F filings that are coming out. And also, I do want to go over some of the other trades that we have talked about over the past week, like ISPO, MULN, BBIG, and NILE, to give you guys my takes on those and how I am really going about trading these, because they're all different. They all have a lot of potential in my personal opinion, but there's different ways to trade them. Not everything is the same with those trades. So we're going to get into it. We're not going to waste any time. Hit the like button, subscribe to the channel, do what you guys got to do. Make sure to come join us on the live stream later tonight, 10 p.m. to 11 p.m. Eastern Standard Time. We're going to be going over some things that I think are going to work very well in this market environment with option strategies, like using butterflies, with potentially taking a small amount into a very large amount of money, using those different strategies. So come join us on there, ask all of your questions. That is what that is for. And if you guys want to come trade with us and join the trading group, link down below in the pinned comment. Nonetheless, let's get into this information. And first off, I do just want to go over the banks and hedge fund liquidations that you are starting to see. And I want to be fully transparent with you guys. This has little to do with one individual stock or thing that has happened. What is going on and why you're seeing headlines like this: SoftBank liquidates most of portfolio at Nasdaq whale trading firm, or Suburbank Group AG placed under moratorium, and restructuring and liquidation of banks and R29 SRM regulation. That's obviously Austria, but nonetheless, Amtech Group insolvency. You're seeing a lot of these headlines that are coming out. Liquidated Cameron's Clothing owes $900K to creditors. A lot of this is happening, right? And on the hedge fund side, Tiger Global's fund sinks 34% this year as key stocks fall. A lot of this is really due because of the over leveraging that has been going on, these stocks falling, and that is because the Fed is raising rates. They're raising interest rates, which raises margin rates, and they're also going to be decreasing the Fed balance sheet by trillions of dollars, something that has never happened before. So you're going to see rates that are very high. This is only the start of these liquidations and these hedge fund losses that you guys are going to see. Now, what's going on with AMC at the same time? Well, the business is actually recovering, and it's going to do very, very well in 2022. So as a lot of these hedge funds and banks are losing money, the stocks that they want to go down, like your retail stocks, are probably going to do pretty damn well, especially as we do start to head into a recession or get more recession fears. Those growth stocks will do much better. And you guys might be confused on that. If you've not heard why that is, stick around a second and let me explain it. And it's basically, a recession is 2 quarters of declining GDP growth. They can be small, they can be big, but that is a technical recession. 2 declining quarters of GDP growth. Well, when there's no growth in the economy, those value stocks, they don't work. They don't grow, they don't work, right? People start to cut back on things. Well, so value doesn't work. Investors, they look towards growth. If a stock like SoFi or AMC or Lucid or something else is growing 30, 40, 50%, investors tend to put their money in those stocks, and they tend to be valued at higher multiples. And AMC is totally included in that. Look at what they have been doing. They are growing. And AMC, Adam Aaron just said they are looking to invest in 6 other companies worth about $500 million. So we'll see which companies those are. We'll see how the markets do appreciate that. I'm sure it'll be another big catalyst that will send us a lot higher. But long story short, these guys are on the wrong side of these trades. And AMC stocks that we own, they're actually on the right side. And it comes in waves. Sometimes dividend stocks are what's hot. Sometimes it's the bank stocks, the oil stocks, commodities like we just seen. Sometimes it is retail stocks or just higher growth stocks. So everything comes and goes, and there's a time for everything. And we have not had our time over the last 6 months. It's not been pretty, but it's coming, and it's going to come very aggressively. Once the tide shifts, you're going to see AMC, all these other stocks just go absolutely insane, and it becomes harder to hold on to those short positions when you start to lose on them, and when the credit situation is a lot tighter, when the Fed is raising rates, reducing its balance sheet, so on and so forth. And I do want to remind you guys of what's going on the 13F filings. Look at Renaissance Technologies. They now own over 4.5 million shares, about 4.7 million shares. Average share price paid an estimate $30.43 per share. In the last quarter, they increased their position by 86.71%. Now, remember back to when they just increased their position not too long ago, 6 months ago, by a couple 100%. That was big, right? But it's not as big as 86.71% because the amount of shares has gotten much bigger. Just not that long ago, they only had hundreds of thousands of shares. Now they have 4.7 million shares, and they're not reducing any positioning. They're actually adding to that in a substantial way. I mean, they added $127 million worth of AMC in the last quarter, and it's now 0.16% of their portfolio, and they're actually down quite a bit right now. And we'll see what the next filing does entail for AMC and Renaissance Technology, but I think it'll be good overall. But now, if we come back to the 13F filings that are coming out, and we're going to start to get more that do come out, but you could see a lot of bullishness here, a lot of green. This one is a short position, which you are absolutely out of your mind for shorting AMC stock right now. But hey, leave it to the hedge funds, right? They just don't make the best choices. Or look at this one. Invinelmic Fund institutional class shares shorted 236,000 shares. You're crazy. I want what they're smoking. Look at all these guys. Look at all these shorts. It's either very bullish or it's a lot of shorting. Another short position for 46,000 shares. Another one for 12,000 shares. And these filings just came out March 29th. So they're not old at all. But then again, look at this. 387,000 shares bought. 144,000 shares bought. 21% add to that position. BlackRock increased their position by 4%. This fund increased their position by 401%. This fund increased their position by 800%. This fund increased their overall, a brand new position of almost 50,000 shares. Brand new 29,000 shares, 11,000 shares, 96,000 shares, 22,000 shares, 65,000 shares. This fund increased their position by 40%. Brand new positions right here increased by 170%. You guys get the idea. It's either very positive or slightly on the negative side, right? Like these short positions. So you could see a lot more shorting activity that is going on, which the time to short AMC, theoretically, if you were going to, was back when the stock was in the 40s, right? Once the Fed was starting to raise rates, and that was the initial reaction of that, was hurting a lot of these growth stocks. That was the time to short the stock, if at all. Not right now. You do not short a stock that has fallen 70, 80% when you have fears of a recession and this stock is growing in the hundreds of percents per year and it's a recovery trade. You don't do that. It seems like common sense, and I know you guys are probably thinking like, hey, isn't this common sense? It is to you, not necessarily to these hedge funds. So nonetheless, it's kind of mixed. You are seeing some just flat out short positions coming out, which is kind of ironical and just shows that, I mean, you fuck with the bull, you get the horns, right? So eventually we'll see exactly what happens with these filings, but lots of bullishness, lots of bearishness at the same time. Look at this fund, JP Morgan US Large Cap Core Plus Fund, shorted 157,000 shares. Like, you're asking for pain at that point. Nonetheless, we'll see exactly where that does go. We have to move topics and talk about the technicals for AMC stock, and then talk about these other stocks where their short interest is, and how I plan to trade those. So it looks like we're heading into a bull flag formation. We'll see. This wedge is getting very close, and we're right at this 25 level. And what I can see actually coming out as far as news for today, you've seen a lot of news that was not necessarily positive yesterday, but nothing really coming out as far as today. So we did see the first day of Q2, that was on Friday. So we'll see how they position. I'm sure they start to buy some of these growth stocks, some of these retail stocks. Some money is on the sidelines waiting to jump back in. So if you do see us break out above this bull flag formation, then obviously that's going to be about, $27 per share. And that's where we can actually make the next move to the upside. Roughly to about $30 per share is what I would imagine. We've kind of just been going straight down. Like, when you go straight up, you inevitably come straight down. And what is very interesting as well is that the MACD this whole time has not really changed all too much. And I think that has to do with the volume that has just been dropping off. So AMC stock is going to trade very closely to what happens with the volume. So the volume has been going down, the stock has been going down. We will see more volume come back into the stock. Historically, if we look at this, it's very low volume. I mean, we've had much higher volume. So you're not even close to that peak FOMO, that peak greed, I guess call it that. So once you start to get more volume that comes back in, you're going to see bigger moves to the upside. But also at the same time, I want to point out that we are still holding on to most of the gains we have seen over the last couple of weeks. So when you see these volume spikes come in, sure, it's great for the stock. It sends us up. When you see lower volume come, which inevitably does happen, do we sink back down to $15, $16, $17, or do we hold up until the next round of volume comes in and we break out past those previous higher highs? That's what it looks like to me. And we'll definitely see this week what kind of trajectory we are in, if we're going to head back down, or if, like I called out earlier today, price prediction video will be in between $26 and $30 per share. That's where I would put my money if I personally had to. Obviously, not financial advice. Now, the RSI is at 58.29, so we've had a cool off moment, and we're now able to see the RSI going back up without it causing more fear. We're able to see a move back to the upside without the RSI becoming on the overbought side. So pretty interesting right there. I wanted to call out the bull flag that we are seeing, as well as just the fact that we are holding up so well in the low volume. I don't believe I have called out the volume in the last couple of videos, but that's important. Volume spike, cool, stock goes up. What happens when low volume comes? Do we go back down to those previous lows or break through lower lows? It's not looking very likely right now. So when the next round of volume comes in, you're going to make those higher highs. So kind of all I wanted to talk about there. We do need to go over some of these other trades. So ISPO, this one is interesting because it has a very low float and it has the possibility to move pretty big when it wants to, right? It's another high growing company. It's a luxury real estate planning company. They handpick the properties, they plan out your vacation for you. And they have revenue of about 250 to 350 million on the last 2 years. So they're growing at about 42%, which is not as exciting to a lot of people that only want to make money, right? I get that. I'm right there in that boat. But this stock was a SPAC at obviously $10, went up to $108, now is back down to in the $8 range, $8.32 per share. And the options go absolutely crazy when the stock moves because of the low float and just how high this stock can move. Market makers want to protect themselves, so they will value these contracts higher once the move actually does start. So right now, I like the longer dated options on this, like the Octobers or Novembers, either the $10 to $15 strikes. I think you're going to get another round of call it retail activity into this stock and other stocks, and you will see these move pretty damn big. So that's kind of how I like it. I want to get a little bit of time, but not necessarily years on these contracts, or maybe get some that are shorter, mid, and long term. like leaps and contracts that go out to May or some that go out to October, right? Just like that. And that's not financial advice. Don't do that. You'll probably lose money. But the risk to reward looks pretty damn good when the stock's at $8, right? I think there's a better probability this thing goes to 16 rather than it goes to 4. So that's that one. Let's talk about MULN. MULN's an interesting one because I got in on this at 70 cents per share. So I'm still up like 300%. Now, if I were going to initiate a new position and look at this like so, you've seen a lot of strength in the chart. I mean, if you draw a trend line here, pretty damn obvious to see. There has been good strength. We're above those key levels we needed to be at, above $2 per share. We've not come under that ever since we broke above that in a substantial way and went all the way up to about $4.20 per share on this day right here. And there is actually some catalyst for MULN. MULN just did this the other day, just went up 29% because the CEO said these vans, these fleet vans that they're going to be making and rolling off the line, they're going to be going to a fairly large company is what he said. So we'll see exactly what he said with that. If it's Amazon, I know there's been a lot of speculation, but I think it's a positive either way. Given the valuation of MULN only in the low, 100 million market cap range, then there's definitely a lot of room for gains here, especially when you're thinking about an EV stock that is actually delivering vehicles to be valued less than $1 billion. Kind of crazy to me. But nonetheless, there is one risk here when it comes to MULN, that they do have to dilute shares sometime in the near term future. They don't have enough money, so just be on the lookout for that. That's going to be the one negative catalyst for MULN that I could see coming. But the short interest of free float is 19%, cost bar max of 145%, utilization of 100%, and the days to cover at 0.40. Now I also do want to look at ISPO. It's not as exciting because not as many people are bearish on this stock. I mean, they actually have a solid business there, right? It's different than these other stocks. They have 139% increase in cash flow just in the last year. So it's hard. It's a little bit harder to be bearish on the stock at $8 per share, right? So that's why you're seeing the short interest a little bit lower, coming in at 8.73%. Cost of bar max at 248%, which does imply a pretty damn big potential move that is coming. Utilization of 63.50 and the days cover at 0.91. Again, a low float stock, so it does have the possibility to move pretty big. And shorts, they have took advantage of this stock and have took on huge short positions on it, going from less than 1% short all the way to up to 8% short, almost 9% short. So short interest likely to move around a lot, likely to be very, very volatile. Now let's talk about BBIG. BBIG. And this one is just like NILE, the one we're going to talk about next. But BBIG has a big catalyst coming sometime in the near term future. It's going to be a spinoff. They're a crypto company spinoff, and it's going to be a dividend spinoff. So why that's so important is because the shorts, they have to pay out that dividend no matter what it is. They have to pay it out. So there's a lot of pressure on shorts to get out of those short positions before this catalyst actually happens, and they're obviously not. That's the thing. We don't know if it's going to be next week, next month, 3 months, 6 months, a year. We simply don't know, but it is coming, and it's going to be a massive catalyst to push us back up to those previous highs that we had seen at about $10, in my personal opinion. Pretty damn big. Pretty damn big. Probably the Hail Mary to squeeze shorts out of their short position. So again, we will see exactly what happens with that. But the way I'm looking at BBIG right now is I want a lot of time on this. I want to get those 2023 or 2024 contracts, or just buy the shares outright. But the short interest of free float is almost 16%. The cost bar max of 300%. Utilization of 100%, and days to cover at 1.10. Now, NILE, the next stock, is in the same boat. But I really like this one as well because the contracts are cheap. Contracts are cheap for those 2024 dates. And those are the ones that I have. I believe I have the 50-cent 2024 calls. So they also do have a spinoff that is coming at some point this year. So it's really hard to time these, but they are big catalysts to get shorts out of their short positions in a very fast way. The last thing a short wants to do is pay out a massive dividend, right? As their cost to borrow rates are high, as their margin rates are also high, it's not a good time for those short sellers. But you're looking at 12.42% short interest of free float, current shares that are sold short of 9.28 million, cost to borrow max of 7.26%, and utilization of 89.74%. Days to cover sitting at 0.79. So NILE, BBIG, both spin-off dividend catalysts that will be happening sometime this year. So if you are trading that, not financial advice, I probably wouldn't if you're not into taking a little bit of risk and potentially losing all your money. That's always a possibility when it comes to options, or just buy the stock outright if you're worried about that. But those catalysts will be coming sometime this year, and that will be basically crushing the shorts whenever that happens. So expect big rallies on those when that does happen. As far as MULN, like I said, they do have that risk of raising capital pretty much at any time to pay for their operations, making vehicles not cheap, and they have to get more money. But this could be a really good swing trade, momentum trade, and that's kind of what I'm looking at it. I have my 500 shares. I sold July $5 calls, collected over 100% of my initial investment, and then I kind of want to hold that one. If MULN can turn out to actually be a decent company, maybe get some partnerships, more hype coming with them, and can justify a higher valuation, could be a really good longer term hold. Don't know exactly. We'll have to see the details. They're gonna raise stock. Let's see what happens with that. But that's kind of the way that I look at it. It's already a win, so I'm not going too big on that one. And as far as ISPO, I definitely like this one a lot for the longer dated options, as well as just buying some shares. I believe I have about 50 shares of ISPO right now. It's not going to be a huge position in my portfolio, but I think there's a lot of potential with those options. So nonetheless, that is going to be all for this video. If you guys found value out of it, hit the like button and subscribe to the channel, as well as if you guys want to come join the trading group, like I said, linked in the pinned comment, and go ahead and follow me over on Twitter. Thank you guys for watching, and I will see you in the next one.